Are you tired of struggling to make money in the financial market? Discover the top reasons why aspiring traders fail and learn how to overcome them. Welcome to my channel. In this video, I'm going to reveal the harsh realities of why so many aspiring traders find themselves trapped in the struggle bus. The financial market is a cutthroat industry. And the statistics don't lie. You may have heard the statistics that 80 to 90% of traders never make money. But have you ever wondered why that is? What's the reason behind this staggering failure rate? If you're someone who has been trying to make it in the market but haven't seen the results you want, this video is for you. I'm going to uncover the common mistakes and misconceptions that traders make and show you how to avoid them. By the end of this video, you will have a clear understanding of what it takes to succeed in the financial market and how to escape the struggle bus. So get ready to take notes and let's dive in. So let's be real, the financial market can be tough, and the stats show that only a small percentage of traders actually make consistent profits. But that doesn't mean you should give up on your dreams of financial freedom. You have two options. Give up and stick to your 9-to-5 job, or try to figure out why so many people don't make money in the market and focus on becoming part of the 10 to 20% that actually do succeed. It's up to you, but don't give up just yet. Now it's time for some self-reflection. Are you happy with your 9-to-5 job, or are you ready to commit to something that can give you the freedom you desire? Trading can be the key to financial freedom, but it's not easy. The first step is to figure out what the problem is and where you're going wrong and work on fixing it. It's important to be honest with yourself and not to repeat the same mistakes. Problem number one, not practicing with a demo account before going live. You might be wondering, why do I need to demo trade before going live? The truth is, if you can't prove to yourself that you are able to trade consistently profitable, you're setting yourself up for failure. It's no fun losing a lot of money because you didn't take the time to become consistent first. Demo trading is worth the extra effort. It will save you from unnecessary losses. Throwing your money into the market before you really understand your trading strategy is a sure way to kiss it goodbye. It takes practice and time to understand the market and build consistency before you start risking real money. Trust me, taking the time to learn and practice will pay off in the long run. However, I don't recommend spending excessive amount of time demo trading, but it's important to give yourself enough time to learn and practice after you've learned your strategy. A good rule of thumb is to demo trade for 1 to 3 months, but what you should always remember is that it's important to demo trade before risking real money to avoid any unnecessary losses. I can't argue against the fact that live trading is the best teacher of all due to the presence of real emotions attached to money. But that doesn't mean rushing into it unprepared. Solution. Learning in a demo account is the first step. Here's the deal. To get familiar with the trading platform, your trading strategy, I recommend placing some demo trades, taking 20 to 50 trades in the demo account. All trades have to be based on your set of rules and your trading plan. If you're not able to be profitable and have a consistent result after taking 20 to 50 trades, give me one reason why you should allow yourself to risk your real hard-earned money. And it's important to take the demo account seriously. Treat it like it's a real account. The more focused and dedicated you are to the demo account, the smoother the transition will be when you start trading with real money in a live account. Problem 2. Overthinking and overcomplicating trading in the financial market. A common issue that people have when it comes to trading in the financial market is that they make it too complicated. It's easy to overthink and overcomplicate things, whether it's your trading strategy, money management, or how often you check the charts. It's a trap that many fall into without even realizing it, especially when it comes to Forex, futures, and stock trading. A lot of new traders make the mistakes of overanalyzing their charts, thinking that more indicators equal better results. But in reality, conventional indicators can actually do more harm than good. I can't stress enough that overusing indicators can lead to a mess on your charts and ultimately ruin your trading account. When your charts start to look messy and more like an art project than a useful tool, you know you're overanalyzing. And if you're constantly checking charts at lower time frames or reading every piece of economic news, chances are you're overcomplicating things. It's important to keep it simple and not to get caught up in trying to overanalyze every little thing. Solution: objective, rule-based trading approach based on supply and demand. The key to successful trading is keeping things simple, and that starts with focusing on the fundamental data, which is price. To avoid overcomplicating things, remember to keep your eye on the most important detail: supply and demand. Don't get caught up in using a lot of conventional indicators or fancy software. Instead, master the art of trading with just supply and demand. Problem 3. Not understanding and accepting losses as part of the process. One of the biggest challenges for new traders is learning to accept that losses are just part of the game. It can be tough for inexperienced traders to come to terms with losing trades. But it's important to understand that it's normal to find ways to cope with it. Some traders try to deal with losses by avoiding stop losses or hedging, but that's a big mistake. It will just lead to bigger losses and a faster blowout of your account. It's normal for traders to feel emotional after a losing trade, but it's important to avoid falling into the trap of becoming afraid, hiding away from trades, or trying to win back the money lost right away. These emotional reactions can lead to reckless decisions and even more losses. It's better to step back, take a deep breath, and come up with a more rational plan. Solution: understand, accept, and plan for losses. The bottom line is that losses are just part of the game, and the best way to deal with them is by planning and managing them effectively. Even if you have a high win rate, you will still experience losses. The thing is, you never know when those losses will happen. They can come all at once, and it can be tough to handle. Like imagining losing 10 to 15 trades out of 100 trades in a row. Can you handle that emotionally? And that's why it's important to prepare yourself mentally and equip yourself to deal with it. It's all about understanding that losses are random and can happen at any time. Here's the thing: there are good losses and bad losses. You might be wondering, how can a loss ever be good? But hear me out. A good loss is when you're trading your edge with discipline and patience and the trade just didn't go your way. You made a good decision, but it was a natural statistical loss. On the other hand, a bad loss is when you're not sticking to your trading strategy, not being patient or disciplined, and making impulsive decisions. The key is understanding that difference between the two and accepting that good losses are just part of the game. On the other hand, a bad loss is one that you could have avoided. This is usually due to not paying attention or over trading. It's important to mention that these bad losses are the main reasons why so many traders give up. A lot of people fall into the trap of overtrading, and it turns into more of a gamble than a strategy. And as we all know, the odds are usually in the favor of the house. And in this case, the house would be the other traders you're trading against. To avoid these bad losses, it's crucial to only trade when your edge is clear and obvious. Problem number 4. Focusing on money instead of trading with a rule-based plan. It's a common problem that a lot of traders get so focused on the money that they lose sight of the actual trading that brings in the money. It's like professional athletes. Do you think they are thinking about money when they are competing or performing? No way. They are focused on performing their best and enjoying the game they love. They put in the work and effort to excel. And that's what successful athletes do. They focus on the process and their psychology. It's the same with trading. You've got to stay focused on the process, not just the money. If you're too focused on money that you forget about the mechanics of trading in the financial market, you won't last in the market. Solution: always learn to focus on the process, not the results. Here's the thing: making money as a trader is all about focusing on the trading and not the money. If all you're thinking about is money, you're not going to be profitable. It's like a journey. If you're only focused on the destination, you're going to crash. But if you focus on the journey, the trading itself, you'll get to your destination without a problem. So don't get too caught up on the money, focus on the trading and the journey. That's how you'll be successful. A lot of new traders keep asking me how much they can expect to make in their first month or how much they should risk. But those aren't the right questions to be asking. The real question is, how do I trade properly? And how do I understand and interpret charts correctly? These are the questions that will really help you out. It's not about how much money you can make right away. It's about learning the right skills to be a successful trader. Most people seem to be more focused on what they can make from trading, but not on how to actually trade properly. And the thing is, you're not going to make money by just thinking about money. You gotta focus on the process and mechanics, like supply and demand. That's the key to success. It's not about what you can get out of it, it's about learning how to do it right. Problem 5. Not paying attention to higher time frame charts first. Majority of new traders, especially in Forex, jump into day trading without really understanding it. They think it's the trendy thing to do and get caught up like in the short time frames like 1 to 5 minutes. And it's not really their fault. There's a lot of bad information out there that makes it seem like it's the best way to make money. But the truth is, those short time frames are just a waste of time and energy. It's easy to get addicted to the quick movement on those charts, but it's not the right way to go. You'll get a much clearer picture by taking a step back and looking at the bigger picture on higher time frames like daily, weekly and monthly charts. This will give you more context and ultimately more profitable results. Solution: focus on trading only the higher time frame charts from the beginning. One of the biggest mistakes new traders make is getting caught up in the short term, like day trading, instead of focusing on the bigger picture. Trust me, it's easy to get addicted to the fast-paced action of 1 to 5 minute charts, but that's not where the real money is made. The key is to zoom out and look at the higher time frames like daily, weekly and monthly charts. This will give you more context and ultimately lead to more profitable trades. I've written a lot about this topic and I recommend you check out my articles on why you should trade only the higher time frames. It's all about understanding the context and making smart, informed decisions. If you really want to make money, you've got to understand the context of the weekly and monthly charts too. Mastering the higher time frames will give you a better understanding of the market and lead to more consistent profits. So there you have it, people. These are just some of the common reasons why aspiring traders can find themselves sitting in a struggle bus. I'll be giving you the other reasons in the second part of this topic. So please check the next video down below. Remember, consistency and discipline are key. And it's important to understand that losses are part of the game. Don't focus too much on making money, but rather on the process of trading. If you found this video helpful, please let us know what you think by leaving a comment below. Like this video and don't forget to subscribe and hit the bell icon for more updates on other trading tips and strategies. Thanks for watching. See you in the next video.